Hey y'all, welcome back to my channel. So as you all know, my husband Lavario and I are in the process of building a custom house on an acre of land we recently purchased outside of Charleston, South Carolina. We've finally closed on our construction loan. We've also signed a contract with a builder. We're now approved for building permits, and so this process of building a custom house is very long, but now we're in a new stage and we have more to share. So today we're here with an update about closing on our construction loan, what our construction loan process was like. We're specifically here to share how we closed on our construction loan with no money down. And then we're also going to share how we're building our home in general with little to no money out of pocket. So if you want to learn more about the construction loan process and how we're financing our custom house build, then keep watching. We did a lot of research about construction loans, and so we just want to share a little bit about generally what happens when you're interested in building on land.
Construction loans are more difficult to get than traditional mortgage because usually with a traditional mortgage you have to put down between 0 to 10%. You can put down more if you want to, but most banks require that amount. But with construction loans, you pretty much have to put down 20% to even qualify for the loan.
And there's not really any wiggle room.
Yeah.
Sometimes people find banks that have products that allow them to put down less than 20%, but with all the banks we contacted, there was no wiggle room with the 20%.
Yes, at least 20%. And next in the construction loan process, your credit has to be pretty much excellent. You have to have at least over 700, and that's even to get a decent interest rate on your construction loan.
So we shared those two aspects of what's required to even be approved for a construction loan, because we want y'all to see that getting a construction loan isn't quite as simple or easy as getting a traditional mortgage. Most people don't have 20% to put down. The average person is putting down around 3%. And so construction loans are very difficult to get for a lot of people. For those that don't have 20% to put down, you may not be able to get one at all. We found a way to overcome that, and we were able to essentially close on our construction loan without any money out of pocket, without that 20% down payment. And so now we're going to share specifically how we were able to do that.
So how we were able to basically put no money down to start our house and get our construction loan is in our previous house, we pulled out our equity using a HELOC. HELOC was a home equity line of credit, and you basically just use the equity in your house to pull out money.
And you can use that money really for whatever you want. So let's just say what you owe on your home is less than what your home is worth. So let's just say you purchased, to keep numbers simple, you purchased your home for $100,000. You've paid on it over a certain amount of time. Now you only owe $50,000 on your house, but now your house is worth $150,000. So you have this $100,000 of equity between what you owe and what your house is worth. So we decided to get a home equity line of credit, a HELOC, on our home. Our home had a lot of equity.
We purchased our land using a HELOC. A HELOC is basically like a big credit card in your house. The bank basically gives you money that they feel like, is the difference between your mortgage and, how much they appraise it for. And they give you that money to, do whatever you want. Most of the time it's for home improvements. But we used it to actually buy our land. And once we were ready to actually go and build our house, our land basically appeared to be free and clear, which it kind of was, in the bank's eyes.
First, I want to talk about some of the benefits of the home equity line of credit, because it's a really powerful investing tool that has really all been the reason why we've been able to secure this construction loan without putting down 20%. Like for example, if we had to put down 20%, then we would have needed to have $100,000 cash to be able to put down on this construction loan. But because we utilize this HELOC as an investing strategy, this allowed us to avoid having to put this amount of cash down for our construction loan for the total cost to build our home. So the HELOC is great because, one, like Lavario said, it's like a credit card for your house. And so what is a credit card? A credit card is like having cash. if I buy something with this credit card, this item is now paid for in full. There's not a mortgage on this item. There's not a debt on this item. There's not a lien on this item. I paid it for with my credit card. It's paid for. You know, it's like having cash. And so because we did not have a mortgage attached to our land, we were able to go to the bank when we applied for our construction loan and say, we owe this land free and clear, there's not a mortgage on it. Can this land be our down payment for that 20%? Because our land, we had an appraisal on our land, and our land appraised for at least 20% of what it was gonna cost to build our home.
Yeah, and the bank basically, they, appraise your land, and hopefully, it appraises it for at least 20% of the cost to build your house. Sometimes, people, their land appraises for more, sometimes it's appraised for less. It all depends on the area and what, pieces of land are sold for in the area. Luckily, we were able to get 20% out of it, out of our land, and we were able to put that towards our construction loan.
So now the bank said, okay, you own your land free and clear. Your land is appraising for at least 20% of what you say it's going to cost to build your home. So now you don't have to give us this 20% at closing. You still have to pay your closing costs to close on this loan. So that's why we say we closed on this loan and we're building our house with little to no money down, because we did have to pay closing costs when we closed on the HELOC and when we closed on our construction loan. But oh my gosh, I mean, paying closing costs was nothing in comparison to having to bring 20% to the table to build this entire house from the ground up.
And so you're probably thinking, like, what happened to the HELOC? Like, where is it now? So basically, once we sold our house, our old house, we used that money to basically pay off the HELOC and also use that equity and the money that we received from the sale of our home to put towards our new home, basically. And we bundled that money together in the construction loan, and now we're able to use the bank's money but also our equity to build our home now.
So the first home we purchased, which is the home we took the HELOC out on, we actually decided to sell that house right before our construction loan closed. And so the proceeds from selling that home paid off our HELOC and also gave us more equity that we put towards our construction loan, so that we're taking out less debt on this home that we're building. So by selling our primary residence, we were, one, able to pay off the HELOC that we used to buy our land, and then two, this gave us even more cash to apply to our construction loan. So if you're thinking about building a property on land you own, we also want y'all to know that a construction loan, the process in general is just a little bit more complicated than the process of getting a traditional mortgage. There are a few other elements that are added into the process that we found were a little bit different in comparison to applying for a traditional mortgage. They do take you through the ringer. It's just a more difficult loan product to get approved for than a traditional mortgage. And then beyond that, there are other things like your builder and
they have
plans.
to talk to your builder. They also have to
vet your builder too.
They have to vet your builder. Make sure he's licensed and bonded. Make sure you have insurance.
Builder's risk insurance.
Yeah, builder's risk insurance. You also have to look at your plans to make sure everything's up to code.
And you get an appraisal on your plans as well. And so based on your finances, you can get approved for a certain amount for your construction loan. But if the bank appraises your plans combined with your land and they say, wow, what you want to take out, if it's kind of like when you buy a house and the house has to appraise in order for them to give you the money to buy your house, it's the same thing for a construction loan. So we were just like so nervous, sweating bullets, hoping that our house appraised for what we needed in terms of the cost to build to be approved for, because with inflation right now, things are so expensive, and a lot of times what it costs right now just isn't really adding up with what things are worth.
And the strategy that we use isn't the only strategy to use to put little to no money down towards your home build. Other people can use maybe getting a land loan or a piece of land they want to build on in the future, and they could just pay down the land and use the equity that they have in the land to, you know, put towards, you know, a down payment for their new home.
Maybe right now you're not a homeowner, but you envision building your dream home, and right now maybe you can't afford a $300,000 or $400,000 home, but maybe you can afford,
interest rates,
especially, but maybe,
right,
yeah, maybe you can afford a $30,000 piece of land. Maybe that's more affordable for you right now. So let's just say you went and got a $30,000 personal loan to buy this land, and you spent 5 years paying that land down. So now that you spent 5 years not only paying off that $30,000 loan, but now your land is probably worth more than what you paid for it. So now you have equity that you can go to the bank and say, hey, I want to build a property on this land based on the potential cost to build. I think my land is worth 20% of what it's going to cost to build this home, and it's almost paid off. What can y'all do for me? Now you don't even have to put down a down payment. As long as you have land and it appraises for more than what you paid for it, and maybe what it appraises for costs around 20% or close to it to build your home, then now you can do the same thing. And even if your land doesn't appraise for the full 20%, at least that land may cover 5 or 10%, and that still becomes less that you have to take out of pocket in order for you to get a construction loan to build the property. So we mentioned that we closed on our construction loan and we're building this house with little to no money down. So now we'll explain what are the little things that we did have to pay for out of pocket.
So the only things we really came out of pocket for were the closing costs for our HELOC, the closing costs for our construction loan was actually taking out the proceeds for from our previous sale of our home. We paid for our plans out of pocket. We paid for our HOA dues, and we paid for taxes, of course, that you have to pay at the end of the year because we held our land before we started construction for at least a year. And also one other thing that we paid for was a land survey, which, you know, tells us how big our property is, you know, what are the parameters of it, you know, if it's in the flood zone, you know, if it's not, you know,
and what trees are on the property.
And also what trees are on the property also.
So those are pretty much the only things that we paid for out of pocket when it came to this whole process of having the idea, finding land, finding an architect who would create the home that was in our heads and written on little pieces of napkin that he put together and created our blueprints. And then now here we've closed in the construction loan, we've secured a builder, and we're about to break ground. Our land is finally cleared, so we'll put some pictures here and a few video shots of what it's looking like right now. Of course, you all can follow us on Instagram at the Lewis Residence, and the link to our Instagram will be down below if you want to follow us for weekly updates. We hope you all enjoyed us really explaining how we have navigated this construction loan process in smart ways to avoid having to come out of pocket with much money. All we've been doing all this time is moving equity around. So this is a really powerful investing strategy that can be used for a lot of different things. Just every day we talk about how we're going to duplicate this again and maybe build some investment properties. Mario said I'm getting long-winded, so I guess we'll go ahead and wrap this up. Our next video is going to be all about giving you guys the inside scoop of our blueprints and the home we're building and our house plans more in detail. We're just so excited about our blueprints now because finally in the next month or two we'll be able to see it come to life in our framing. Stay tuned for our next video. Thank you for watching. Follow us on Instagram and we'll see you all in our next video. Continue to move onward, upward, and forward. Until next time.